Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, July 9th, 2008. Well, an ugly reversal day on Wall Street today, folks, and we saw the indexes giving up basically what they had gained yesterday, if not more. And that's almost the exact thing that I had said yesterday we did not want to see today. We saw the turn period pass yesterday with a monstrous rally in the markets as oil collapsed. And oil was fine today, but there were issues out there in financial land and the dollar land. And the dollar really was a non-event today. It was a little weaker against other currencies. It was the financials. It was Freddie Mac, Fannie Mae, and multiple other financials out there that just lost control around 2:30 p.m. and the market just collapsed. And we saw the Dow dropping about 237 points, the Nasdaq down about 59 and a half, and the S&P down about 29 points. And this across the board, this was 2% to 2.5% pretty much drops after went up almost 2% yesterday. So really, you just saw an up move yesterday and then a down move today as they fluctuate and try to shake the longs and the shorts out of this market. Now, you guys know how InTheMoneyStocks.com feels. We feel that the key turn date period was yesterday and the day prior and so forth, and this market is making a base for a move up. Now, today, obviously, we had mentioned in yesterday's video, this was the one thing today we did not want to see, and it happened. And that's unique and unbelievable from the perspective of seeing a reversal of this magnitude. However, there are going to be some key things we're going to look on the charts for, and there's only one worst case scenario that didn't come to fruition today that we did not want to see worse than what happened today. So we're going to look at the charts today, guys. We're going to look at the indexes, and I'm going to show you the levels, the key levels for a breakdown or a breakup, and we're going to take a look at that as we go into today's video. So let's pay attention and go over what the market did. Okay, here's the ES futures, okay? This is the S&P futures contract, the September '08 E-mini S&P 500 contract, and you can see that the market's kind of trading along. It's going up, it's going down, and right now the financials are trading flattish on the day, up a little, down a little, and so forth, and oil's trading up a little, down a little, and you remember the three keys to this market. And these three keys we've talked about for multiple videos now: the dollar, oil, and the financials. Now, oil behaved itself today. We needed a pause out of oil, and oil gave that to us. We had hoped for a pause in the markets because the pause would set you up for another bullish move up after you get a little bit of a retrace. Even a possible small down move was okay in the markets today, but you really didn't want to see the markets give up everything they gained yesterday and then some. And that's predominantly what we saw today. So what you can see here is that the market's actually making an interesting pattern, and I want to point this out, and you guys will probably know what pattern this is as soon as we draw it in. And you can see here, a little bit of an M pattern, and we fall. Once you break here, and note this break, alright, here's the break of the pattern, and then you get a little slam down as the M pattern comes to fruition. Then you get the little bit of an A formation out of that, alright, and out of that A pattern, then you get a slam down, and it comes to full fruition, the MA pattern, all the way into the close, but we're basically closing at the lows at this stage of the game. And that's not a good sign in the markets. Obviously, volume today was a little less than yesterday, but it was still a decent day in volume. So you can't look at it and say, well, it was a light volume day. In all fairness, it was a decent volume day. A little lighter than yesterday, but nothing to squawk at. So the keys here in this market, you can see the pattern that we made all day here. You had a double top up here, and if you had shorted that double top, what a move down you could have gotten out of this market. But again, considering we thought personally that we'd have a kind of a pause day, a little up move, a little down move, we weren't exactly looking to play that either way. All right? So regardless of what we're going to see here, we're going to go into the 60-minute charts and show some key levels to watch now. And this is where we really get technical, guys, because this is where we're on the hairline of either confirming a possible breakdown in this market or showing that you're still in play for that move up. All right? So let's take a look. I'm going to flip to the 60-minute chart on the ES, and we'll look at that. All right, so here we have the 60-minute, and you can see the magnitude of the move yesterday, and then you can see the retrace pullback of today's move. Now, the interesting thing is, and what I meant by, remember just a little while ago I said it was a negative scenario today, but it wasn't a worst-case scenario. And this is why, folks, and watch these charts as we draw on them. The worst-case scenario would be a break of this level right here. You have two levels on the downside that you have to hold now. Number one is this level right here. And you can see here on the chart, I'm going to draw it in, and we'll draw that directly across. This was the low from 2 days ago in the markets. The second level was yesterday's low. This cannot be taken out. If you take this out and you close, and this is the key, you close below that level, that's where you get into trouble. A pierce intraday is okay, because then you're going to kind of fluctuate and get all the the weak hands out of it, and you kind of clear that out. But the key is here, you'd like to hold this line right here. It's of utmost importance that you hold this line here on the ES futures. And these correspond to levels on the SPY, and I'm going to show you that so those of you that don't have the ES can follow along here with the SPY. But needless to say, yes, we did fall today, and it was a dramatic fall. But looking at the ES, we did not take out the lows from 2 days ago or the lows from today. And again, I repeat, it's imperative that those levels are held on this market. All right, you get below those, then we start to talk about possible push down to another level on the S&P futures or the S&P 500. That would be the next level for a breakdown from that. So very important, again, that we hold, and we're talking about closes on the daily here. The closes on the daily, and I'm going to show you the daily chart. It's very important we don't get below this level here and at the very lows right across here. So you can see the two levels here. And again, you're not talking about an engulfing candle. Let me flip back and forth here. And we'll flip to one and then the other so you can see that chart again. Not a full engulfing. An engulfing would have had to have closed below here. So don't make that mistake as a technical analyst there. But again, you want to follow that chart, and we'll flip back to the intraday 60-minute, and you can see exactly what we're talking about. Ugly sell-off on the financials. We're also following this pattern as well. You can see the double top that we pointed out on the intraday 10-minute is somewhat intact. Do we get a bounce off this level and then come in or not? And again, it all is going to come down to, and this is what we're going to have to watch, this level here and this level right here. Now let's look at the SPY 60-minute, because this is also shown on the SPY 60-minute. You can see the basic levels of support. Right in this general area, which we came down to almost, and then the very lows from 2 days ago are going to be extremely important to hold. Now the futures trade overnight, so we were looking at lows from overnight. They're not quite the same, but it almost matches up, and you can see this point here. Very, very important that we do not take out and close on the daily below these levels. Okay, so watch those levels on the SPY. Really what you're looking for, the 52-week low on the SPY, 123.92. Any way you cut it, though, I don't care what anyone's going to say. Yes, granted we didn't break down here, but it was not a good sign today. I have to tip my cap to this market and say, not a good sign. You really did want to see a pause day or a small pullback. Even, NASDAQ down 20, S&P down 10, Dow down 80, 100 points is okay. When you have the Dow down 236 and the S&P down almost 30 and the NASDAQ down almost 50, almost 60 points, that's not a good thing, all right? We did not want to see that in this market. So again, we're going to have to follow very closely. This is going to be key over the next couple days. If this move up that we're expecting is going to come to fruition, we need to see these levels get held, and we're going to have to see the market build back up and possibly make a move. Watch the financials. The financials right now are everything. The kind of oil's in the back end of things right now. And I'm going to show you the 60-minute USO chart, and I want to show you something interesting on this. But remember, the three keys to this market that I've been talking about in multiple videos now. The dollar is one, oil is the other, but financials have taken the lead. Oil last week and the week before was the lead. All right, that's all that mattered in the market, was how oil was going up $5 every day and so forth. Now oil's pulled back. We got that $10 pullback in oil. All right, now it's all about the financials. All right, the financials are the key to this market right now. Freddie and Fannie Mae, I'll show you the charts on those in a minute. They got slaughtered today along with Merrill Lynch. There wasn't much spared today, frankly. A couple small caps actually did okay today, but everything else got killed. Now on the 60-minute USO, this is what I wanted to show you. Here's the top. All right, here's where we ended up. And look at what we're holding here. This is the 200 on the 60-minute moving average. And look at how we've been holding this level. All right, so watch this 200 moving average over the next couple days. If this should break lower, the next stop on this market is down in this range here at a gap fill area on the 60-minute. And after that, you're talking about 107 being a next support, then 104, and then 100. So if oil breaks down here, it could fall very, very quickly. Be ready for that. That would give a market bid, but it's not going to buoy the markets unless the financials go go up. You need the three keys to this market: financials again, oil, and the dollar to all participate in the right directions that they need to go. Oil down, financials, and the dollar up. That happens, you'll see the monstrous rally that we've been talking about, or than hoping for. If we don't see that, this market has a very good probability of breaking down. But all we can do is follow the charts. And again, just to flip back to the ES on the 60-minute, this is what we're following right now. These two lines, keep watch of them. All right. Now on the NASDAQ, and we can check out the daily. Let's look at some daily charts here. The NASDAQ basically closed at yesterday's low. That's as close to an engulfing candle as you can get. But on the NASDAQ, the same thing applies. You want to watch it for that low and this low now to be taken out. You get a close on the daily below that, very likely they're going to start selling this market again, and hard. Alright, we're going to start looking for positive and negative divergences on key levels that we follow at near the bottoms of markets where we think whether you're going to start to develop. So we'll keep you posted on that in coming videos. Come join the chat room. Very important to come join the chat room as we discuss this all day long. Those in the chat room have top-notch analysis going all day about the market moves. So I do encourage you, those that want to learn technical analysis, learn the charts like we teach them, come join that. Come join the Swing Trade Alerts. We will talk to you tomorrow. Get ready for a crazy ride, folks. Take care.